Hello, this is Dale again, and today I'm going to be doing a video on a very profitable trade on the Standard & Poor 500 SPX monthly. We put on a bull put credit spread on the 14th of October 2021 and just got out yesterday, October 20th, 21, with a very nice profit. I just want to go over why I chose that trade, how I got in, and the reason I got out. Again, my name is Dale Brethauer. I've been a trader for greater than 4 decades, hedge fund manager, and a guest speaker at a number of platforms. I've written 3 financial books, and I am the stock option coach and founder of what I believe is the very best option credit spread educational website and alert website available today, and that is www.optionsinfinity.com. Towards the end of this video, I'm gonna take us over to there and show you how you can sign up. The advantages of vertical credit spreads: they give you great returns when coupled with a high probability approach to the price action. Now, I'm going to show you the equity curve later on, and you'll see how it brings in consistent profits on a monthly basis. Again, high probability success trading, especially when you're doing the vertical spread where you're selling one option and buying one further out of the money for protection. We are sellers, so time is in our favor. We're selling out of the money options, and the only value they have is time value. And the further you go into the trade, if the trade goes with you, if you think it's a bullish move and you have on a bull put, you not only get a rapid decay of the premium because of the movement upwards, but you get a rapid decay of the premium because of time. One of the nice things about vertical credit spreads is you don't have to constantly watch the market. You can check on it a couple times during the day, and usually you're going to be just fine. So it's a low anxiety way of bringing in consistent profits, and that's how I've evolved to using this in my own portfolio. I sleep good at night. You don't have to worry a lot about constant movement in the market. And because we are selling one option, then buying one further out, we have protection against losses. Now in this curve, what I'm showing you is the rapid option decay of time that occurs in the last 30 minutes. And you can see it's exponentially as you get closer to the expiration date. We're taking advantage of that. A bull put spread is a type of option strategy that's used when an investor expects a rise in the price. Now, the beauty of credit spreads is there are 3 ways you can win. With a bull put, you're expecting the price to rise, but if it doesn't, if it goes straight, you can profit, and even if it goes down a slight bit, you can profit. This is different than buying a straight call. Straight call, you not only have to go, it has to go up, but it has to go up quickly in a matter of less time is better for a straight call. Here with a bull put, we've got time in our favor. If it goes up, you win. If it goes sideways, you win. If it goes down a slight bit, you win. This strategy is constructed by selling one put option while simultaneously buying another that is further out of the money. This is a trade we put on the Standard & Poor SPX. We put this on October 14th when you can see that the price came up here right around 44.28. And what I saw is the price had gone down. It was down around the -2 of the regression channel. I teach all this in my classes. It came up, it made a measured move right here, and this is where we entered. And we entered by selling a bull put. We sold the 19 November 42.30, which was way down here, way out of the money, a very conservative trade. And then we bought one for the same time period, and this gave us a net credit of $2.05. You say, well, why don't you just sell this one naked and take that whole $50? The problem with that is that the brokers are going to require a lot of margin, and you have to be a highly skilled professional to do this. But not only that, you can get more return on margin by actually going in with a credit spread and having protection. Now, you can see that this was a case where it went up, 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 and came up to right around the 127 on the Fibonacci's on the October 20th, and that's the time I decided to just go ahead and take profits. I never take this all the way to expiration. Expiration would have been 19 November. I got out October 20th. And you do this by buying back the 19 November 42.30 put at 15.05 and selling the one you had previously bought at 19 November 42.20 put at 14.40 for a net debit of 60 cents. So what you've made is the $2.05 credit minus what you bought it back for, or $1.45 profit, $145 on one contract. That's a very high profit. Now, $145 on one contract, if you get 10 contracts, which a lot of people do, that's $14.50 on this trade alone. This trade was only in for 3-4 days. If you have 50 contracts, it's well over $7,000 on just this move in 4 days on the Standard & Poor with a credit spread bull put. Now, I have to remember that past performances are no guarantee of future results. And I do have losers. I show you a lot of the winners. And what I'm going to do, I think, next time is I'm going to show you a losing trade and how I managed that trade and how I got out without a great loss. Losing is part of the game. There's no strategy out there today that has 100% winners. We average about 75% every year, year after year, of winning trades, and we win more when we have a winning trade than losers. And that is a positive expectation strategy. This is a return on margin chart showing that from 2019 until currently October 2020, we've had 76% wins, and you can see this equity curve. And this is the kind of equity curve you want to have in your portfolio. Yes, indeed, we do have losers. We do have losing streaks. But if you stay with this, it's a positive expectation trading strategy. And like I said, I'm going to be probably my next video, I'm going to be talking about some losers and how we manage losing, because that's part of the whole strategy here. A new member as of January 2019 would have earned $8,284 by October of this year. And that is investing in only one contract per alert that I send out. The membership to Options Infinity is $99 a month, and that boils down to a cost of about $3,000 for the 2 3/4 years. And this gives a net profit of over $5,000 per one contract. Now, many members invest 10 or even more, and that results in, of course, much higher profits. So the beauty of this strategy is you can earn while you learn. And what I'm doing is I send out alerts whenever I see a trade that I think is going to be profitable. You know, we have every other week we get together and have a 1-hour webinar where I teach some of the tools. We go over some of the tools. We talk about the trades, why I got in them, why I got out. Of course, all this is past performances is no guarantee of future results. Now, let me go ahead and go into our website here. And of course, this is www.optionsinfinity.com. You can see we've been doing this for, well, it's getting close to 10 years now, or 11 years. This is where you'll come in when you type in www.optionsinfinity.com. If you go to the membership tab, either here or here, it'll bring you to the page, and you can either join right away, or you just go down and read some of these things. You know, it shows you what some of the latest trades, what we focus on. It's the 3 principle method, how we do it, and then it talks about what's included. What's included is, and this is interesting because from March to June of 2019, we struck the price from $198 a month to 99. It was so popular, we've kept it there. What you receive is, of course, I send out the text and email alerts on trades when I see that they're gonna be good trades. That doesn't mean it's gonna be profitable all the time, but I will also send out a text and email alerts when I'm gonna exit that trade. You get 2 times a month, we're gonna meet up for an hour, answer all your questions, go over all the trades and what we're doing. And of course, I've always got the position list that shows what trades we're in and how those trades are doing. All that for $99 a month. You can cancel at any time. It's recurring every month, and I think it's the greatest thing out there for anybody who's interested in consistent profits. I hope you join me, and I hope you enjoyed this video. Stay tuned for the next video when I talk about some losing trades. Bye-bye now.